What's happening to the markets this year? After coming off a record-breaking run last year, 2015 is proving to be much more difficult for the U.S. stock market. Why is that? What's changed since last quarter? Well, let's explore this today on this Safe Insight for January 15th, 2015. We certainly ended 2014 on what looked to be positive ground. Employment numbers were improving, gas prices were declining, muting inflation and spurring retail sales, and coming off 3 good quarters of growth, things were looking pretty good. So what's happening? Well, there are several things taking place today that are affecting the market negatively, and while none of them is in and of itself critical, taken together they pose a challenging environment where fear, uncertainty, and doubt are becoming the rule. First, the rapid drop in fuel prices has led to real stagnation in the Russian economy, which in turn has led to an economic drop in Europe. Germany, principally, is a huge trading partner with Russia, and this has hit them hard. And the U.S., well, we're a big trading partner with Germany. So number one, Europe has been sliding into recession. And of course, when we talk about Europe, don't miss the situation in Greece, where that tiny little country is causing some real problems for the European Union. Second, China has slowed its growth from its breakneck pace of 10% a year down to about 6% per year, which while still strong is slowing a bit. Third, the final month of December proved to be not quite as strong as analysts had hoped. Retail sales slowed for the period, and if you take auto sales out and remove that number, well, they slowed quite a bit. So the trend that was in place for growth may have been broken. And finally, the markets are today trading at a relatively high valuation. So people who've made money and see these externalities happening are quick to take profits. Throw in the nastiness last week in France, and you've got a recipe for a profit-taking market. Does this mean that 2015 is going to look like this? Well, we of course don't know, as no one has a crystal ball. However, as the first quarter moves on, we can see possibly the situation in Russia stabilizing, the growth in China stabilizing, and the growth in the U.S. at least holding steady. This should, barring any major disruption, lead to earnings growth for American companies between 2 and 3%. So that could fuel continued market growth. However, as Washington has become increasingly a huge influence on economics, the behavior of the federal government and the Federal Reserve will have an enormous influence on what the future holds.